right, hello everyone. I'm Sean Taggy with Memphis Investment Properties. I'm the Chief Operating Officer over here. Kind of help out in the acquisitions and sales.
My name is Scott King. I'm the General Property Manager of Reedy and Company. So I head up a majority of the leasing, collections, maintenance departments here at Reedy and Company.
Awesome. Yeah, so today we're going to go over a case study of a client call we just had with Reedy and Company. It's someone who bought a turnkey property from us about a year ago. And we kind of get these kind of calls where people, we like to address it. We like to address the hard part of real estate, right? Like any investment, there's risks and there's negative things to it. There's also pros, which we'll go over. But Scott, can you kind of dive into this client's call and what you addressed with the client?
Sure. Yeah. So, and we get these calls, not often, but it's really sometimes when people are just getting into real estate investing, they don't truly understand what the back end of what their investment is. So a lot of people who are new at real estate investment tend to try to think of it more like a stock or a bond.
Right.
Because that's what they're used to. They're used to investing in more, solid returns, and albeit they're lower returns in the stock market and the bond market. So it can be a little confusing for them on the front end. And what ends up happening is as soon as there is a hiccup in their rental or their receiving of their rental income,
Or their tenant or something.
or their tenant,
Right.
it's like they raise a red flag real quick, and a lot of times they want to kind of abandon ship.
Maybe buyer's remorse. We've heard that, something like that.
And it's usually within that first 12 months of ownership that we see that happen.
Right.
And I think the reason for that is just because they're a little unsettled by the whole process. And so as soon as something kind of comes up that is, albeit unfortunate, it's a part of investment real estate, they immediately want to, abandon the ship and sell their piece of real estate and, put that money back into something that's a little bit more secure.
Right.
But what we're trying to do is educate these investors to teach them that, hey, look, if you really dive into the numbers and you really look at this from an analytical standpoint, you're still doing 5 to 10 more times better than you would be had you had this money placed in a more
like
secure,
a bank account, a CD,
a bank account, or the stock market, whatever it might be.
Right.
And so Sean and I have kind of done a little case study here on this specific situation to kind of help show people what their actual returns are. And when I was on the call with this person, that's what I did. I took about an hour of my time and we really just dived in to look, okay, what was your down payment on this property?
Right.
What is your cash on cash return at the end of the day?
Right.
Have you looked at the tax advantages? Have you looked at the appreciation? And by the end of the call, when I was able to lay everything out, they were much more happy and calmed down and kind of understood it a little bit better.
That kind of makes me think, like, people sometimes just see one side of the story, but real estate is, you got to see the big picture and the long-term perspective. Those other advantages, besides just cash flow, there's other things happening, not really in your bank account, but on your net worth statement, your paper. You're making money in more than just one way, like a stock market. It goes up or down. There's other things that are coming in. So we're going to explain that a little bit. So Scott was talking to someone who owns a duplex, correct? And
Correct.
they bought it about a year ago.
Mm-hmm.
So, and this doesn't typically happen, there's just a probability. There's just a ratio that a tenant's going to have a rough time with their life or lose a job, right? We can screen people as best we can, but there's still those things you can't screen for, like what's going to happen in the future, right?
Sure.
And so we do our best to take care of that up front. But there still is that roll of the dice of something's going to go wrong. And you know what? If you own property and you own 10, or if you own 10 for 10 years, you're going to have these issues. I'm aware of them. I own about 8 units right now. Scott, I know you own quite a few.
Mm-hmm.
So from our experience as well, we go through this as well. So we're not immune to vacancies or anything rough on our properties as well.
And there's an X factor in investment real estate, and just like what you were talking about, it's, I mean, there are going to be hiccups along the road. So looking at investment real estate as kind of a short-term, in and out type of investment is probably not the best way to look at it. Like you said, I'm a long-time holder of real estate, and I know at the end of the day, it is a numbers game.
Mm-hmm.
I can, I can try to help some of my X factor by adding more properties to my portfolio.
Right.
But even if you only own one duplex or one single family home, you just have to really understand the numbers behind it, and then that way you can feel more comfortable with your investment.
Awesome. So yeah, so what I did, and Scott and I kind of talked about, and this was funny because we were just talking about this over lunch, and we hear this from just a small percentage of our clients, but they're the ones we're trying to take care of and help out the most and help them see the big picture. So this property was a duplex, a 2-bed, 1.5 bath. Each side was running for $600 a month. It was 2414 square feet, built in 1967. This client purchased it in January 27th, 2018 for $79,900. They had a great deal. Most of our duplexes do not sell for that now because the market's appreciated. So if they put 20% down, they would have $15,900. Let's just call it $16,000 in it. And they got a 30-year loan at a 5% interest rate, so their monthly mortgage payment was $343. So what we've calculated is that this person had, a tenant move out, right? Was that the issue? Or?
Yeah, and so what happened in this specific case is they had an eviction, and they were only a couple months into ownership, and understandably, that they would have, a kind of a come apart when, you just purchased this investment property, and then 6 months later, you're evicting a tenant.
Mm-hmm.
But what I try to explain to them is that falls into that unfortunate series of events that does happen from time to time. Of course, we're always going to try to mitigate those types of things happening by our screening process and everything that we do on the back end to ensure that we're putting good tenants in the homes. But again, this type of stuff does happen from time to time in investment real estate. So it's just important to be able to weather those storms.
Right. Yet again, I'm a numbers guy, engineer, and it's just a ratio. You're going to have, it's like 1, maybe 2% of your properties, you're going to have that chance of that happening.
Correct.
Yeah, so going back into here, so what I did is I made like a pro forma, so basically what they're making each month, their vacancy. So what I did is just to model the vacancy on this property, I put that the property is vacant for 3 months of the year. Okay, so like just a very, like I'm trying to help people see worst case scenario here, right? That's a very long time for something to be vacant.
Correct.
Typically our properties, it's on average around 4 to 5%. If you average it, our average tenant's staying for 2.75 years. So this one, let's just call it a bad eviction. They're out for 3 months of the year. And I put it as both units. So with a duplex, because you have 2, it kind of helps two tenants. That helps that. But anyways, their net income would be this with a 23% vacancy. That's what I have over here. So 1/4 of the year. So then I put in the taxes, the insurance. I've calculated all this up front. The management fee of what collected rents were. We charge 8%. The maintenance. I have other videos to explain this. Anyways, the client's net operating income was $6,500 a year, so they're still in the positive. So that's one thing. This client was still making money per the year.
Correct.
So I think that's one thing to see. And it's still not even worst case scenario even if you make $0 per the year. I'll kind of model that in a little bit. But after paying their mortgage payments, they're cash flowing $2,400, which is still a 15% return on investment. That's dividing $2,000 divided by their $16,000 down payment. That's a great return. I mean, I'm happy with that. Just that return, that's outperforming a lot of the stock market.
Sure, and that's but inflating some vacancy numbers and kind of giving what a worst case scenario really should be. So at the end of the day, if your worst case is a return of 15% on your investment, I mean, I'm going to take that every single day of the week.
Right. Right, and so that's with just 1 year. And it gets better every year, and we'll explain that a little bit. So let's say even if this client made, no return on their investment. Okay, let's say they lost, they had nothing, no gain. They made a 0% return on investment, like they lost everything that year due to vacancy and whatever.
Mm-hmm.
Okay, so here's what I love explaining to people, and here's what I love to show myself when I do my own projects. When I get discouraged with mine, with some issues, a big water heater goes out or something, and I get wiped clean of cash flow for the year, I like to see the other aspects of real estate. So the first thing that I just love, that when you have a mortgage and this leverage and this debt, is that you have a principal pay down. So you're paying, let's say you're still paying those mortgage payments, right? And the tenant, for the time they've been in the year, are paying that. So I put a loan amortization. So during the first few months, they're paying a lot in interest, right? But you're still paying a little bit in principal pay down, right? And the mortgage balance is slowly decreasing over time. Go and try to. I'll maybe film a video. Getting a lot of good ideas. I'll film a video explaining this. But
Sure.
First year principal pay down is $943. Hey, that's something. And dividing that by what you put into it, $16,000, that's a 5% ROI. So I mean, heck, even if you make no money on the cash flow,
right, you're still getting a return on your pay down and appreciation.
Right. So,
I mean, it's investment real estate is an amazing business to be in, and I mean, again, it just comes back to having a good understanding of the numbers.
right. So even thinking, man, I don't make any money, I'm still getting a 5% return from paying down that principal, right? And when you'll realize that once when you sell it, but on paper, on your net worth, that increased your net worth $943.
Well, and that's another good point as to why kind of holding real estate, for a minimum of 5 years makes a lot of sense, because you've got tenants occupying your properties that are helping pay down your mortgage payment, and then at the end of 5 years, you can really kind of evaluate from there. Okay, how much has my property appreciated? And that doesn't even include what your rent increases are going to be over that 5 years, because we're seeing anywhere from a 4 to 8% year over year increase in rental amounts.
Right.
So, I mean, you have these value adds in real estate that just kind of come, that you may not even be.
You're not even trying.
You're not even doing it.
Inflation is beautiful.
Yeah. So, I mean, it's a great business to be in when you really look at it from an analytical standpoint.
Right.
I love it.
Yeah, we're just still going over 1 year. So then the second thing is, after that 1 year, like I mentioned, they bought this out of steal back in the beginning of 2018. Duplexes have gone up. Now Memphis went up as a whole around 5% in 2018. So if they increased, this property increased by 5%, it'd be worth 83 now. They bought it for 79. And now it's worth 83, so that's a $4,000 increase. That's a 25% ROI. Why is that? Because they're doing a 1 to 5 lever, right? A 20% down. So that just helps increase it so much. But let's just say it appreciates 1%. They're still getting a 5% appreciation. And so that's awesome. So that's another thing that, even if you don't make money, you're still paying down principal on that appreciation of 5%. And I love seeing that. And I don't count on the appreciation, but it's nice to have.
Sure.
Right? The next thing is these tax advantages. So there's lots of advantages to owning real estate. One of them is the taxes. So what you can do now, talk to an accountant. I'm not an accountant, but this is what I do on my personal properties, and my accountant suggests I do every year, is you can depreciate the value of your property. Now you can't depreciate the land, so the land is worth $9,500. I looked it up. So you can depreciate $70,000 of this property, and what you can do is you can depreciate that over 27.5 years. So I divide 127.5 divided by the total depreciable value, so you can depreciate $2,500 on your gross adjusted income. Also, like I mentioned in the loan amortization, you're paying a lot of interest that first year, You're like, hey, that seems kind of unfair. But one thing nice about that is that that can be a write-off. Check your taxes and all that. I'm sure there's like a maximum, but just assuming you're kind of you can do that. That allows you to write off $5,700 to your bottom line. So if you made $100,000, you'd be able to write off, let's just call it 6,000 rounding up. You could write off. You'd look like you're making only $94,000. And depending on your tax bracket, I just assumed you're in a 25% tax bracket. Basically, going back into your pocket would be $1,400.
Sure, which is another return.
Another return. It is something you don't see.
And the tax benefits of being a landlord are really, really great. You know, there's some new stuff, and again, we're not, you know, tax consultants or we're not real estate attorneys, so just want to put that disclaimer out there. But at the end of the day, you need to have a conversation with your accountant about the write-offs that you're going to get by owning rental real estate. You know, you can write off the income, you can write off some of your expenses, and there's some new tax laws that are in place now that are really benefiting some of our owners.
Oh, absolutely.
So yeah, I'm excited to see how much I get to write off this year because.
Right. Yeah.
The more money going into my pocket and the less going into the IRS's pocket is the better, in my opinion.
Right.
So.
And so, you know, some people who are doctors or attorneys making high income, they might be in a 30-40% tax bracket, and that would be even a higher number. Anyways, just assuming that conservatively, that's an 8.9% return on investment again. So really putting all of this together, this is what I love seeing. Let's just say, worst case scenario, this person didn't make any cash flow for the year, which rarely happens, but if it does, you need to look at the other three parts. Your principal pay down, there's a 5.9% return. Appreciation, assuming just 1% appreciation, there's a 5% return. And then the tax write-off, there's an 8.9%, to totaling a 19% ROI without the cash flow. And it just blows my mind. Like, so I try to explain that to people and help them see that, those other pictures that they're not seeing, you know, because it's hard to see that, especially starting off. And I got discouraged too a couple times through seeing this, but when I do this, I get more excited each time.
Sure. And it's hard as an investor, and especially when you're new to the business and maybe a little green, you know, is when the X factor stuff comes up, you know, when you have a major repair that has to be done, or you have an eviction, or you have a tenant who is just a slow payer. But those are the kind of, you know, you have to learn to weather those storms.
Right.
And then you start to become this seasoned investor who understands that, hey, even in the bad years, you know, even when I'm not cash flowing, you know, there are still huge advantages to owning this real estate. And what that does is it just makes those years where you're cash flowing even better.
Awesome. Yeah. And here's what's awesome is this is just year one. It gets better. And, you know, we'll do another video on maybe the years after this. You know, if this person will hold it for 5, 10 years, 15, 20. Really, the icing on the cake is 30 years, because then your mortgage is done and there's an extra $343 in your pocket.
Yeah.
So great things on there. Yet again, comparing this to the S&P 500, over the past year, it's gained 2.78%. So we're beating the S&P 500, which is a safe bet in the stock market. And the S&P has had a great bull run over the past 5 years, 50%, so 10% year over year.
Mm-hmm.
But I'm still putting my money on real estate. I'm doubling it just in year one, and that's a bad case scenario.
Correct.
So that's what I've done personally. I'm doing this. I'm practicing what I preach here, and this is what I've seen. I do have some, you know, diversified and everything like that, but the majority of my money is in real estate, and I'm trying to be strategic, and I can control this asset. I can't tell all those S&P 500 companies to increase the value of their companies, right? I can't control that, but I can really tangibly make some changes to this real estate.
The volatility of the stock market, to me, makes it an unattractive investment. You know, yes, I do have some investments in the stock market and to really super safe mutual funds. Mm-hmm. But I mean, probably less than 10% of my net value is actually in the stock market. All of my cards are on the table. All of my money is invested in Memphis real estate.
Right. And that's funny you mentioned that. That's what I do. I leave my money in the stock market until I get enough money for a down payment on a house.
Right.
So 20 grand. That's what I'm really doing, just at
Sure.
least so it's not sitting in my bank account or something, and I know I can get it out fairly quickly, right?
Yeah.
So that's what I see a lot of people do too. Is
And
they're just saving up for the next one.
well,
Yeah.
and two, I mean, by the time you really kind of take out the fees that you pay to these brokerages,
Right.
so if over the past year, I had a 5% increase in
Let's say.
gains of my mutual fund or my stocks, I still have to pay a 1% fee to my stockbroker,
Right.
and I have negotiated a pretty good
Right.
fee for
That's
that.
pretty
So
good,
some
yeah.
do a lot more than that. So really my 5% then turns into a 4%. But then I'm
I was
taxed.
about to say that.
I'm taxed on my 4% gain.
And let's say
so then
25%. You
so
got
then it's
3%.
yeah, so then it's 3%.
Yeah.
And when I look at that, it's like, man, it doesn't make sense for me to pay this guy's salary and just feed them with money for what I consider a relatively low return.
Right. You control 100% of these properties. They're your own. We manage them for you, but we're just working for you. You're our client, right? And so we're obviously we're trying to treat you like you are a client, like they're our own, because they are. A lot of these properties we manage are owned by the company, but by ourselves.
Sure.
And so they're all treated the same. It's not like we're giving the good tenants to ourselves. We can't do that. We can't discriminate or anything like that. So
Yeah.
so anyways, we're just trying to show people the realistic picture on some ends, helping them see the future, and then helping them see the long-term perspective and the other assets of real estate that are so amazing.
Yep.
And so I hope this video helps everyone, and you can reach out to us at memphisinvestmentproperties.net and then Reedy & Company.
readyandcompany.net, and our emails are on there. You can go to the contact us form and reach out directly to us. We may put our emails at the bottom of the screen when we go back and take a look at this. But yeah, we appreciate everybody's time, and if you have any questions, please reach out to us.
Yeah, and we also have any turnkey property available on our memphisinvestmentproperties.net website. And I'd be happy to give you a call or one of our other investment counselors, and we'll help you kind of work out your goals and help you get started in real estate. So yeah, thanks everyone.
Thank you.